Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, January 16th at about 3:30 p.m. Eastern. Well, the S&P 500 rose slightly today, but was still on pace for a losing week as traders weighed the latest comments made by President Trump related to the Federal Reserve and geopolitics. The three major averages hit their session lows earlier today after Trump delivered remarks in which he said he'd rather have National Economic Council Director Kevin Hassett stay in his current role, and he might not be chosen to become the next Fed chair. Traders see Hassett as the more market-friendly option to replace Powell, with Wall Street expecting him to be more willing than other candidates to keep rates low. And so on that note, we will go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, today when I captured this chart, the SPY was trading at $692.84. Just below the all-time highs, if you can even see, set earlier this week at about $695. So, it's just a couple, 3 points. The SPY is still walking up its red line. It's still walking up its 20-day moving average. And the 20-day is right under 50-day at the moment. The 20-day is coming in at 688 and change. And the 50-day moving average, the green line, is down here at 681 and change. And while we're at it, the 200-day moving average, the black line, is coming in at $633 and change. So we know for the most part that the SPY, look left, the SPY has been walking up its 20-day moving average for the past, actually now, do you believe it's been 9 months? It's been 9 months since it rebounded off its April lows at 481. You can't see it on this screen. It's way back here in time. 9 months ago, the SPY rebounded off its April lows, so that was at 481. And then since then, by and large, it's been trading in an uptrend, walking up its 20-day moving average, until right here it hit its October all-time high at 690. That from April to here was a 44% gain. Then, as we can see, in October, this rally started getting a little tired out. It started showing signs of fatigue. So in October, right here, it dropped down to the 50-day moving average to 653. That's the farthest it dropped in literally like 7 months. Then it rallied up to that all-time high at 690. Then it did a dive down here to 652 in November. So, an uptrend consists of higher lows and higher highs. This isn't exactly a higher low. We're fudging a little bit on this, but for a point or two, we'll leave it alone, because then it rallied back up and walked up, started again walking up its 50 and 20-day moving average. Still, even though it's fallen, again, I see it showing signs of fatigue here, which makes total sense. I mean, my gosh. But the bulls who kept control, and even off this November low, the SPY rallied back up, rebounded, and continued the uptrend again up over the 50-day and the 20-day to where we are now. So now we're looking at this right here. If we do that, it comes to there. We can do that, and this line we can do. I didn't want to curve that down so much like that. It's easier to do with a pen than it is with this. So we have, all in all here, we've got a pretty, we've got a triangle going here. And as I talked about last week, you all know that triangles break either pretty high to the upside or pretty down to the downside. So we've got to see in the coming week if the SPY can continue this uptrend, we're diving now into fourth quarter earnings season, and that's going to be going on for the next 3 to 4 weeks, but certainly the next 3 weeks. So it'd be interesting to see if price can stay above these moving averages, or if and usually earnings seasons are positive, but you never know. So we're going to, I'm positive now, but I'm getting a little more cautious because this is, we'll have to see if the bulls can continue to keep this momentum going as we move through earnings season. So maybe firm up your protective stops a bit here. Our next chart is a daily chart of the Invesco QQQ, symbol QQQ. This is the ETF that follows our NASDAQ 100 index, which is the top 100 non-financial stocks in the NASDAQ stock market. And it includes all the Magnificent Seven, the NVIDIAs, Meta, Tesla, that whole group. Now, when I captured this chart today, this candle right here, the QQQ, was trading at $621.91, right down here. As you can see, the candle is red on the day. It dipped earlier in the day. And it's still below this all-time high in October at 637. That's still up here. At the moment, the Qs are trading above the 20-day moving average, which is coming in at 621 and change, and the 50-day, which is coming in at 616. And while we're at it, the 200-day is coming in down here at 565 and change. Now, we know, if you look left on the screen, but we can't see it, we know that back in April, everybody made the April lows. So back in April, the Qs made the April low at 402. And then it rallied, and you can see it as it comes on the screen in July. And then it rallied, and like the SPY, walked up its 20-day moving average and walked right up. Now, did it falter a few times? Yes, it did. And this is a lot more volatile than the SPY because this has got so many tech stocks in it. But anyway, admirably, it walked up its 20-day moving average for the most part. And up to its all-time high up here at 637. This was a 58% rally, so that is really cool. So then from the highs back here in 637, the Qs did a dumpster dive here. Now, as we just said, the definition of an uptrend is higher lows and higher highs. This made a lower low, so we could say, if we wanted to, that the Qs broke that great big long uptrend they've been in, but it was only momentarily that it made a lower than this low right here is what we're saying. But that may be nitpicking, because then it rallied back up, came back up here to 628 to 628 in December, down here to 600. And then rallied and consolidated back up to where we are now. So we can also draw this. So we can, excuse me, my mouse is a little slippery today, so this is not picture perfect. But we can draw another triangle coming in here is what I'm saying. So we've got to keep an eye on this. This could go one way or the other, and could do so dramatically, but possibly. So we've got to keep an eye on this because it's important if you have any tech stocks in your portfolio, your trading portfolio. So here, if the Qs are going to break out, of course, the resistance is going to get here at 628 and 637. Of course, we have support at the 50-day and the 20-day down here, just below 50-day at 616. Then we've got this low down here at 600. Then we've got this low down here. We've got at 580-something. We've got the 200-day coming on here at 565. So hopefully we don't need all this support, but it is there. So once more, the cues are looking a little more reserved this week, so I'm going to keep an eye on them. And again, we've got fourth quarter earnings season coming, so we need to trade very, very carefully. Our final chart today is a daily chart. We've never looked at this, certainly that I can remember, but I thought it was interesting today. It's the ProShares Pet Care ETF, symbol PAWZ. I'm just going to call it the pause. It has 27 top holdings, including Zoetis, Chewy, Freshpet, IDEX Labs, and Merck. Okay, so I was going through charts today, and when I captured this chart, the pet care, the pause, was trading at $55.89. Now, and that is above its 20-day moving average, which is coming in here at 55.23, 55 and change, the red line. 50 days coming in at 54 and change. And looks like what happened here is it came down in October and fell below its 200-day moving average pretty decidedly here. Dropped down to close to 52 in November, and then came back up and is consolidating here. So now it's trying to, because it came below the 200-day moving average, now it's trying to get back up over it, which it did today. It closed above the 200-day moving average. That's a good thing, which is coming in at $55. And it's right under, it's coming in at $55 right under price, which is over it today, closed slightly over it. So what we know about the pause is that back in April, when everybody had all the April lows, the pause, you can't see it on the screen, by the way, the pause fell back down to 47. Then they rallied in an uptrend up to a June high at about 60. Then it started drifting sideways, and you can see it come onto the screen in July, and it's kind of rambling around here, although it looks more dramatic price-wise than it really is, but it's rambling around, kind of skipping around, because after all the AI stocks are getting all of the attention and all the tech stocks. So pause is just kind of rambling around here. It fell down below its 200-day moving average in August. It started, then it came down to about 54 and change, then rallied back up, and then fell down here in September, rallied back up, retested that a little higher in October, then rallied to 56. Let's see, it rallied here to 56 because it's just been kind of ambling down lower. Then it jacks up, then it falls back down, then fell back down here in November to a low here at 52. Then it rallied up here to 56. Then it consolidated again along its 20 and 50-day moving averages, and just recently started getting a little more orderly, which is what I like, because that means more buyers are coming into it, or at least in this case. So I'm just looking at this and thinking that maybe this might be something to keep an eye on. So if in the coming week the pause can stay above its 50-day moving average, and that's coming in at 54 and change, if it can stay above its 50-day moving average, I will buy a small position in my trading portfolio, and I'm going to keep my stop down here pretty tight at 54.25. So it has support here. If you can see this, it has support at 54 all the way through. A lot of support here at 54, even back into July. Okay, so again, I have my stop here at 54.25. If and when the pause can rise above 56.50, if it can rise above 56.50 and close above it, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the pause in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. How to swing trade successfully. We've talked about this before. This is one of the most popular programs that we have. Traders love this. It shows you how to enter during upswings, right when the upswing is starting. So say you've got an uptrend going like this. So it shows you how to enter during upswings, how you grab a sweet spot out of the upswing as it's happening, and then how to pocket your profits before price starts to get lower. So price starts like that. And let's say that we're in this long and we see this coming. We say, okay, I'm getting out. So what I like to say is we capture the center out of the Oreo. That's that. You'll discover how to trade my Sleeping Tiger setup and use it over and over again to make consistent profits. Our new low price for this program is only $187, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. From our popular 7 Steps to Successful Trading, our flagship product, which people love, to how to swing trade successfully, how to trade the trend to profits, always one of my favorites. How to read charts, great for novices. 3 winning setups, great for short-term traders. And how to bottom fish like a pro. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you will have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.